I think it is a very, very important point that what the central banks are doing is they're not buying gold, they're selling fiat currencies because they understand the difference between money without any counterparty risk and currency with counterparty risk. So what they're telling us is, hold on, this whole system is looking a bit dangerous. The gold price has been rising basically by foreigners, and we're talking about central banks, if you like, national wealth funds, ultra high net worth individuals in Asia and all the rest of it, well, there's a lot of them now. They're buying gold, and they're buying gold for the reasons which we've been discussing. Silver is not part of that story. I would say that the futures and forwards markets are doing what they should do. Basically, it's speculators taking a view on where the price is going. I mean, they're looking at it. They are inevitably looking at it as gold is going up because you're accounting in dollars or whatever. Okay. The answer as far as physical markets are concerned in the West is that sentiment is very poor. Nobody's really bought into this. I mean, they really haven't. If you look at sort of total, sort of portfolio exposure, it's probably less than 1% is exposed to gold. Now, given that gold is real legal money, that's an extraordinary situation when there is so much risk around with all the debt and everything else. It's bizarre. A lot of it is due to the fact that the Americans have run a very successful propaganda campaign trying to remove gold from the financial system. And so for the last 50 years, people have come to believe that rather than, the reality, the common law reality, plus the accounting reality, the difference between money and credit. So, the sentiment just isn't there. And we're beginning to see a little bit of demand coming through ETFs. Now, I think that demand, we're seeing it more in America than we are in Europe, but I think that demand is from, investment managers, big investment managers, are not necessarily buying into the concept of gold, but see that, the price has been rising, et cetera, and this is something which makes sense to include in a portfolio. So I think we're seeing that sort of advanced institutional demand. What tends to happen with a bull market, if we can just think in those terms rather than the true terms of the relationship between gold and credit, what tends to happen is that you find that the speculators will begin to drive up prices first. You will then find that, more serious players will then get in on the bandwagon, and the last people to play, the public, because they will have seen that something has risen and it's risen and it's risen and it continues to rise, and therefore you've got to buy it because it's obviously rising. It's obviously rising. This is the place to be, particularly if everything else is not looking good. So we haven't got that ETF thing, if you like, virtually at all, except for a few institutions who are beginning to adjust their portfolios. And I think that probably sums up the current situation. Gold has this additional factor that, ahead of the speculators, you've got central banks who begin to look at their reserves and the balance of reserves and all the rest of it, and they start adjusting things. Now, it is a common statement that the Central Bank of China, the People's Bank of China, has been buying gold. That's not the way to look at it. Actually, what they've been doing is dumping dollars. Now that, if you understand the difference between the two, it tells you something extremely important. And this is in common with all the other central banks. And remember, they've been told by Vladimir Putin, who's had his reserves stolen by us, don't trust the West, don't trust their currencies, buy gold. He's pretty much said that. And, so you sort of think, these guys, I tell you, the central bankers I've met are actually pretty cute. Most of them do understand, sort of, if you like, the outcome for the purchasing power of foreign currencies, etc., etc. It's just they're not in a position really to do anything about it themselves. But, the fact that central banks continue to buy gold, in fact, they're pretty much cleaning out all the mine supply, tells you quite simply that these guys really are in the know. They're ahead of the speculators. The speculators can see it, so they go and buy. And, the poor old swaps and bullion banks find that they're getting squeezed. But I don't think we need to dwell on that too long. But no, I think it is a very, very important point that what the central banks are doing is they're not buying gold, they're selling fiat currencies because they understand the difference between money without any counterparty risk and currency with counterparty risk. So what they're telling us is, hold on, this whole system is looking a bit dangerous. It is extraordinary that here we are in, as you put it, a gold bull market. And the gold-silver ratio is looking at 89 times. I mean, normally I would expect silver to rise at about twice the rate, maybe slightly less than twice the rate that the gold price does. And it hasn't. Now, it has actually performed more or less in line with gold, but what's happened is that this is because the gold-silver ratio has remained very, very high. I think we've got a problem here because if you go way, way, way back, silver, obviously, I mean, you had currencies which were exchangeable for silver. Sterling was one of them, for example, until Isaac Newton came along and things changed a little bit then. And also in America, I mean, that was the initial currency there, the money rather, that's the initial money against which, banknotes or bank deposits or whatever were issued. It is no longer like that. I mean, in our lifetimes, we've seen silver coins. At least I have. I don't know how old you are. I'm not going to ask. But when coins, you had silver coins and copper coins, and those are two monetary metals. So we have to ask ourselves, okay, if we start moving towards a collapse in the purchasing power of currencies, which we are already, incidentally, are we going to be in a situation where silver is going to come back, let us say, for small transactions? I mean, silver in Britain was legal tender for up to 40 shillings, which was £2. So there was a legal tender involvement there. I suppose it's still the case, but £2 is absolutely nothing. If you go back to the gold standard, we could exchange £1 for one sovereign. So under those circumstances, 40 shillings was the equivalent of two sovereigns. Two sovereigns today is £1,100. Give you an idea as to how. So what's happened is that silver has effectively been devalued out of the monetary system completely through no fault of its own. But there is a huge shortage of silver, and somehow they're managing to manage the price. I think you need to be an industrialist, you need to be a specialist in understanding how technology is changing and how that affects, say, silver versus lithium and, and all the rest of it. And future uses, defense uses, which, we're not really told about. I mean, this is a metal with huge, huge properties. I mean, it is the best electrical conductor. It is an excellent biocide, and it's finding new applications the whole time. So this is a very, very precious metal. It is not much more around, if you like, as a commodity in the Earth's surface. It's not that much more than gold. I mean, I don't know what the ratio is. I think something like 8 times as much silver, if you like, in the world is estimated compared with gold. So why are we on 10 times that ratio with a gold-silver ratio of nearly 90? It looks like it's being mispriced to an extent. Now, I don't think we go back to the sort of 14, 15 times that we saw when silver was actually valued as real money. But what I do see is that at some stage there could be a huge great squeeze on the silver price, probably triggered by a rise in the price of gold. I mean, if gold starts rising and breaks into new high ground against the dollar, in other words, the dollar is definitely tanking, and silver is going to be, moving up with all the other commodities. And actually, if you look at the broader commodity complex, it's up reasonably well. It's doing quite well. Gold reflects this. So, we've got the whole of gold, as if you like, leading the way in that context, and it's going to take silver with it. But I think that at some stage, and it's not monetarily related, I think we're going to see a big, big squeeze on silver. Huge, great squeeze on silver.